Our guest says investors can make money in stocks this year, especially in gold and silver, and there are opportunities for investors seeking solid value. Joining us now, Ross Healy, Chairman, Strategic Analysis Corporation. Ross, always great to see you, and thanks very much.
Andy, always great to be on the show with you.
Could you generalize? Do you think the broad indexes will be up this year, if you had to hazard a projection?
Yes, I do, Andy, and I think that the Standard & Poor's 500 looks to be breaking out over a key valuation breakpoint by our measures, and that appears to be sort of underscored by the fact that the Dow Jones transports have also broken out to a new high, which essentially confirms the Dow.
That's
so. If we've got the Dow confirming the S&P and the S&P breaking out, it looks pretty interesting to me.
That's a class. That's the Dow theory, I think, that if a move is confirmed by the transports.
Absolutely, Andy. Yeah, right on.
What is your take on silver and gold right now, Ross?
Well, I have to start off by pointing out, of course, that Andy, every time that I've been on BNN with you for the past 3 years, I have always said buy gold and buy gold stocks. But why, with them up this high, would I still say that? Well, on account of the fact that. Frankly, the U.S. balance sheet continues to deteriorate at maybe not in an alarming pace, but it continues to deteriorate. And the one big beautiful bill is going to really accelerate that process as the year goes on. Now, Trump argues that. Perhaps the income from the tariffs are going to offset that. I don't believe when I see the size of the income, I don't believe it for a minute. But I would also point out that those tariffs are under some question as they are being referred to the Supreme Court for their legality. And if those tariffs are, the legality of them is overturned, then there's all kinds of companies in the States who have been paying those tariffs and are lined up already with suits, legal suits, to recover the tariffs that they have paid. Well, if you were to add the recovery of those tariffs onto the income effects of the big beautiful bill, you're going to have just a heck of a deficit in the states this year. Under those kinds of circumstances, Andy, you got to go for gold.
Maybe we could put up, I think we can do this, a one-year chart of TLT, which, as you know, is a bond ETF in the United States, tracks 20-year bonds. We have seen a drop of about 5% in the actual price of that ETF since October. So, but there hasn't, I don't think there's been a dramatic sell-off in US bonds.
No, not dramatic, just steady.
Right. A couple of stocks that you have on your radar, I think you think they're decent ways to play gold. Starting off with Alamos Gold, Ross.
Yes, Alamos and I think maybe I should put the two of them together and say Alamos and Agnico Eagle. They are by far and away, as far as I am able to ascertain, two of the very, very best managed of the gold stocks, probably on the planet. They're politically safe, and that's definitely a consideration of mine. But when you look at the management and you look at their reserves and their developing reserves, particularly high quality reserves, in both cases, they are steadily improving. And indeed, if turning to Alamos specifically, which has actually made a kind of a long-range forecast of their production, it is, I think it's scheduled to something like a double in the next few years. Well, if you've got high-quality reserves and you've got a doubling of output, then you fundamentally have not so much a gold stock, you've got a growth stock. And a growth stock that happens to be in gold, to me, is a perfect combination. So looking forward, I would say this is the kind of company that ought to be a kind of a cornerstone of your portfolio.
The Mag 7 stocks as a group are down about 4% this year. Of course, their performance varies, but you do see a sign of broadening into stocks other than these tech giants, Ross?
Yes, I do, and one of the things to not leaving the Mag 7 stocks, but dealing with them head on. What I'm suspecting this year is that the whole AI cachet, if you like, is kind of leveling out, is kind of sanding off, as it were. Not that I'm necessarily expecting a plunge, but I think, first of all, huge overinvestment. Second, a lack of evidence that investment is earning money profitably. I think and third, by the way, the fact that the server farms are going to have to spend billions on electricity, because Trump does not want the regular grid to be basically feeding them. Their costs are going to go up. I think their returns are going to come down, and I suspect that the stocks are going to be mushy at best. So what is the market looking at? Well, I think what it's looking at is, okay, where are we going to go? Well, where you're going to go is you're going to go into quality stocks that that have not moved to the same degree by a long shot as the Mag 7 stocks. And there, if you look at those stocks, they have, I think some of them have quite a ways to go.
We'd better leave it there, Ross. Thank you very much indeed. Ross Healy, Chairman at Strategic Analysis Corporation.